The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days, and in fact, it's almost the end of the month. We've got another day to go. September wraps up, and what's the candle going to be for September? I've got a guess, but we'll talk about that in a moment. In the meantime, back at the ranch, we're going to thank John Logan. We're going to thank Steve Rhodes opening the show for this opening week, and I hope that those of you who are trading the Nadex platform are just enjoying yourselves, having a great time. What a market. You've had a beautiful smash to the downside, 1718 S&P futures points, and now you're back again. Dow's only down 75 at 17,037. S&P's down 7 at 19,075. Comp index is down 4 at 4507. Gold is working its way higher a little bit. It's up 250 at 1217. Silver's unch at 1752. You've got high-grade copper at that $3 level, 3.05. Watching it real closely. It was under that earlier, and now we've got crude oil at 93.5. But bonds are the story. Bonds are up 11.30 seconds at 124. Nope. Up 27 at 138 and 15.30 seconds. You've got the dollar, and I am showing you the dollar down. Dollar is down a tad. Now let's just look at the charts. If you're looking at the charts right now, you're using I'm using the Chapman wave methodology. I'm showing cup formations, arch formations. I'm using trend lines. I'm using the MACD. Here's the MACD right here. There's the E-mini. Look at that. Terrible MACD pulling back sharply. Stochastics very poor at 23%. You've got the 120-minute chart making those H patterns, lowercase h patterns that fail on the left side. This one went to the 1957.75 level the other day, hit 1956.50 on the 26th. And now we're at the 29th, and what happens? It goes right down to 1955.50, slightly lower, and that says this arch formation should bounce back very quickly and hold. If it starts to fail later in the day, and the S&P goes, the E-minis, which are 1967.75 right now, start to go back to the 1963 area, that's very poor action. That says that we should have another attempt at a rally tomorrow. Oh, well, actually, now we'll talk about the candles. Let's move this away. Remember, 877-927-6648 is the number to call. Bunch of things that we want to go through. Let's start off now with, we'll go to the Dow, INDU, talk monthly charts. What kind of pattern am I expecting? Well, based on everything we've looked at and based on the work I did for my subscribers, I wonder if I can get that now. Let me show you what I did for my subscribers over the weekend. I think it's this one here. Yes, it is. Where is that? Well, I did a couple of things. I'm going to go to the big picture first. I love black backgrounds. I use them for a long time, 15, 20 years, I don't know. But because so many people like to cut and paste and copy what I have in my chart portfolio, I decided about 2 years or so ago that I'd go to the white background charts. It just makes it easier for printing. Otherwise, look how much ink you're going to use. But that black background gives you it's like high definition. Look how beautiful this is. This is what I sent out to my subscribers, to my opening call, my daily newsletter. What I said is that the monthly chart is starting to show signs right here. If you look at it close enough, you will see signs of deteriorating internals. Those deteriorating internals can go on sometimes for a few months. You can even go for a year. I remember seeing the advanced decline line, which many people use as the gospel, declining for a way long time. I think it was in 1987, and it just didn't give you the sense of a top because it kept saying, this is a top, and the market kept going higher. So every once in a while, you will get this lagging indicator really lagging. Eventually, it turns out to be correct. Now, what I'm looking at here, just get a nice, let me just go here and see what you're looking at here. So we've got apples to apples. Not here, not here, not here. There it is. Okay. So that's a little bit, yep, that's good. So what I did is I wrote up a whole story over there, what I'm looking at. This is a very long-term monthly chart, goes back to 1996. Of course, I could have gone back to 1920, but I decided enough months were covered by 1996 to 2015. 14. And now look what we're following here. That within this up channel, the second up channel, and the previous one had a buy mode that went to a D, pulled back and started a brand new A, B, C, D to an E, and then an F to the October 14,198 high. Well, we often see highs come in, not often. Often enough have we seen the highs come in October. So there's a chance that if on Wednesday, I don't care what the reason is, anytime this week, if we see a new high in the Dow above 17,351, I believe it was. Or was that 351? Let me just double check. Don't want to give you the wrong number. I believe it was 17,350. Yes. So any move above 17,350 would say this is the time to be looking at the weekly chart, and I would suggest then that the weekly chart is recycled higher. That's number one. Number two is that I made a really big deal about the VIX index. And that VIX index has very quietly been moving higher. We'll get a good test today to see whether or not. When the futures were down 13 points and then 14 points today, and then back to 12, and then out of the blue, it went down to minus 17, minus 18. I thought, oh, man, I can just see this. They're going to turn this market around a little later on. Big squeeze at the open. Why? Because this is the end of the month. There's enough money there to do some buying. And I think we're going to use up that buying over the next day or so. So this is what I'm looking at. You see that the MACD, the yellow and red lines right here, that yellow line is starting to dip and it's starting to touch the red line. That's a clue that you're getting a little bit overbought. The other is this horizontal line. I'm sure somebody's going to take that and say, "Hey, that's a great instrument. Look at that. Who thought of putting a trend line right there on the MACD?" Well, there it is, and it showed you that each time the price went above this trend line, you started to get toppy. You went to peak E in January of 2011, 2000, I meant, at 11,471, pulled back to 10,000 to the October. See, October makes lows and highs. October low, and then what happened is you went to the October high of 2007 at 14,198. Pulls back, comes down to the March low of 64.69 in the Dow. And what does it go to? It goes to September, and this coming Wednesday will be the first day of October. Will we be hitting 17,352 is the big question. Okay. So now the S&P's come back to minus 391. Dow's only down 5. Down 50 after being a massive decline to the bottom, to the trend line supports, and now we'll see what happens. All right, so I want you to get this out the way. Now let's move this away. Gone. Now let's look at the monthly chart as it stands right here with a white background chart. What do we see? We see a little doji candle. So I did a whole story for my subscribers based on this particular chart formation as we see it right here. And here it is. Right here. Whoops, wrong one. Right here. And what did we do? We went to this particular, I can't find it. It's right there. Now, is this the monthly? Nope, that's not the monthly. Where did the monthly go? Is that the monthly? Yep, that's the monthly. So I blew this up to say, mustn't use that expression. I expanded the chart so that you could see just about 6 or 7 or 8 bars in the weekly and very few in the monthly. But I wanted to show how that Roman candle should test its bottom. Well, what happened today? This is just an amazing feat. Look what happened. Pull that away. Here's the weekly chart. And what did the weekly chart do? Because, look at this. And that's what I said. In a Roman candle, if you go to halfway into the wick, you're liable to touch the bottom. And what was the bottom yesterday, on Friday? 16,945. What was the low today? 16,934. We took it out, and now we're bouncing. So we got to a little oversold condition. The MACD's still 84%, but that's the MACD's starting to deflect lower, and the stochastic's at 84%. And I have a suspicion. Now we can talk nitty-gritties, and then we'll go to our first caller. I have a suspicion that we just might be seeing something here that's really important. And that is that what I call the double hump, where the stochastic has an extra arch formation, like an M formation, and then the MACD might be telling us that it's going to fail. This is such an important period, because if we don't take out 17,350 high in the Dow this week, but instead we start to trade and close below today's low of 16,934, that's going to tell me that we're finally seeing the leaders, the generals, start to take on water, start to become very heavy, and that the soldiers have been leading the way down. That is the IWM. Look at the IWM. The IWM, the Russell 2000, and the generals can't go too far unless the soldiers are right behind them. That's the way it works. So we were going to watch this real closely. IWM went to a new low. The 120-minute chart says, yep, we might have a little bit of a bounce here. Yep, there it is. A little bit of a bounce, but it's still the same patterns of rally and fade, lower highs and lower lows. We'll see if that changes. Okay, let's go to our first caller. We've got Ben in Tallahassee. Ben, how are you? We've got Ben, and I think Ben must be listening in on the computer because he's got a little bit of a delay, but he's going to say, hi, I'm
Hello.
here.
Basil, how you doing?
I'm doing well. How are you?
Great. Quick question, because I gotta get going here, but I greatly appreciate. I got Apple at the recent highs, right around 102 as a short.
Yes.
And I'm extremely tempted to put a second position on, like right now. Any thoughts on that?
Okay, so folks, Apple's trading at 100.34. It's down 39 cents. The 120-minute chart is making this rectangle formation. It's just trading. It's bouncing around within a band that goes to about 103, just under 103, and it comes down to just under 98, and then it bounces back into the middle using the 200-period moving average at 99.36 as a tell. Now, Ben, the way you were speaking, is this the moment that you're able to do it, and then you're not able to do any trades during the day, or is that or are you going to be around for the day?
I guess my thought was to add to it as it would come down, so a buy stop.
Oh, okay. So then let's do this. I'm going to grab my 10-minute chart because
Sure.
You're going to be talking intraday, and we'll do a little bit of homework.
Well, but with the intent to hold it for a week or so, you know.
Okay, we'll be right
Yeah.
back with Ben. Dow's down 42. S&P's down 3. Basil Chapman. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So this is what we wanted to look at here. The Dow is down 45, S&P's down 4, and we're on with Ben in Tallahassee, Florida, and we're looking at Apple. So, Ben, this is what I'm looking at. In terms of channels, Apple has just had the most beautiful daily channel. It's held this channel remarkably. It's gone to the top of the channel, gone to the Chapman Wave inside track reversal zone, and plop, it comes down. And what does it do? It holds the support. And it just did that there's a daily chart on Thursday. We went to 97.72, bounced, stopped dead at the 9-period exponential moving average. Today it went into that inside track support zone again. It's a rising trend line. But look at the MACD and the stochastic. They are very poor. And that suggests to me that Apple is going to bump into a lot of resistance very soon. When I jump over to the 10-minute chart, the 10-minute chart made a beautiful peak F. Let me just do this right at that low that was established on the 26th at 97.86 at 4 in the afternoon. It bounces, it gaps up, goes to peak A, pulls back, starts a brand new inside buy mode and goes peak A, B, C. Then it goes to a D, E, and an F. This is with no technicals whatsoever. I'm going to try to show people that if you understand the chart formations, it's sometimes better to be able to understand the formations and then use the technical tools as an adjunct, as something that complements your thinking. Just as I always say in the Chapman Wave methodology, any robust system, any methodology that functions continuously under all conditions, that's a robust technique, should embrace any other techniques that you happen to have. So here's my thinking. It's gone peak A, peak B, you're making a peak C right now in the 10-minute chart. This is such a critical period because you've had the tremendous sharp sell-off. You've just had the buying come in, and I suspect what we've been looking at over the last week and a half to 2 weeks is that a tremendous amount of the activity that I've been monitoring has all the ingredients, at least at this particular point, of rug pulls. It's getting a lot of people in just throwing up their hands and saying, I've just had it, I've set out, the market is now in the 17,000s. I got out in the 10s, the 12s, the 14s, and here we are in 17,000. I've just had it. I'm getting back in, and I don't care what happens because it's going to come right back and go to new highs. Everybody's saying that, so this is my thinking here. And when I look at Apple on the daily chart, that peak E was accompanied with good technicals and then immediately broke down. And then when it went in the weekly chart that I'm looking at, since you're trying to hold this for at least a week or two, has a potential for a leg F. Now, one of the reasons why I'm calling it an F, with just the chance that there could be a rogue wave G, a sudden spike that takes you above 103.74, the high of the week of the 5th of September. One of the reasons why I say that is because the MACD has expanded. This is what I do when we do our Master Trader series. I spend a lot of time on this because that fast-moving average, the green differential, 9-period differential, held all the way through that peak D beautifully, and it went to an E, went to an F. It met all the criteria. It even had the criteria of making a potential F1 and an F2 to say that you didn't get the G, but there were all the signs that you could have popped up to the G based on the on-balance volume. So I think because the monthly chart is still incredibly strong. So I'm trying to time it to the sense that you've got a beautiful cup formation. You went above the 100.72 high back in 2012 and all the way down to the low of 55, and now you've doubled that. You've gone to 103. Not all doubled, but almost doubled it. This is exactly the time where you should get some kind of a pullback. So here's what I'm going to recommend. That's a long-winded way of saying I'm going to suggest that you don't add to the position now, that you have a little patience. You might miss the best entry, but I can just tell you this, that there have been so many leg Ds that I would not be surprised if within the next hour and a half there's just a sudden move to the upside to go above 100.40 for leg D. What I've done is I've drawn that pattern that I call the Groucho Marx eyebrows. You've got the left side peak F in the 10-minute chart. You've got that sharp move to the downside. Now you've got the run back up to the right eyebrow, and that says that somewhere in the area of between 100.46 and 100.74, somewhere in there, we should be making some kind of a double top in Apple. It might not get there, but I'm going to suggest that you've already seen it go from the low today of 98.63. Hey, that's a nice move for you on a percentage basis based on the short position you had, but this is a big bounce. So I don't want to be too early. So I'm going to suggest you hold off, and if it takes out 99.90, I would then add another small position on the short side. But I'd probably say try to hold off a little while late afternoon. If it's starting to fail under 100.45, then I'd add another small position. Hope that helps you.
Basil, thank you very much.
Thank you very much for calling. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and mentioning in the den there about the wet weather down in Charleston, I guess it is. And we've had dry. I've never known such a dry summer into the fall. I've been watering my evergreens all the time. We've got like 20-something trees, and I don't want to lose these trees just because of water, so I'm watering away. I've never seen so many brown leaves or yellow leaves on these evergreens. Anyway, back to our story. I'm going in the request list. So the first one was overnight, over the weekend on the dollar. The dollar has made a peak E in the 120-minute chart. This is the dollar index, United States dollar index. But it's holding very well so far. And what's really clear to me is that it's the candle, it's the resulting candle that comes after today that's going to be really important. What we've got is a G/C in the index with a potential doji candle today. MACD's at 90%. That's good, but it is dipping a little bit. And the stochastic is, and the MACD is still good. But look at this. This is the DXZ. This is the December dollar. That's in F. So putting it together, on-balance volume is about to turn down. So I'm looking at the dollar, I'm saying, okay, dollar, you give me information about what's going on. Because if I look at the USD JPY, which is parallel the dollar, moved exactly the same, it too has got a G/C. And that's exactly the discussion I had about Apple a few moments ago with Ben in Tallahassee, Florida. I said that the MACD, one of the lessons I teach about the MACD, this particular MACD, if certain conditions are met, you can go to an F and even a G, but you will not make a second buy mode going to a D. That happens. Well, we're going to be watching this USD JPY dollar currency pair with the Japanese yen really closely. Why? Because if, in fact, there is some kind of a peak E-top in the 120-minute chart that drags it down, if the Japanese yen, if the US dollar yen slides from 109.31, where it is right now, 46 cents, if it goes under 108.13 over the next week, that's going to say, uh-oh, be careful. You could be making a very large oval formation. I don't know about a major top yet, but these patterns can unfold with time rather than price. So we might be looking at time going into a week and a half, going to the end of next week as the dollar pulls back and the USD JPY pulls back. Not only that, it's a leg D in the weekly chart. And look at this weekly chart. It's an amazing chart. And look at the... This is an alternative count. And now look at the dollar weekly chart, DXY currency pair. Look at that. This is just an experiment in beauty of the cup formation, the H formation. They can go to a powerful cup or bowl formation to the break to the upside. So far, there is nothing in showing weakness here in the weekly chart of the dollar. Now look at the monthly chart. So the answer to John, who asked me about this, answer to... Let's see, I had a couple of people asking me, but the most important one was the first one. It was a question about the wave count. Yeah, I believe it was John. Just checking it out now. There it is. Yeah, it was, John. Okay. Is that the monthly chart is at a beautiful formation trying to go to the 8644 200-period exponential moving average. It's in leg G/A. There are many ways of counting this, but it's not even important to count because the MACD is good. Stochastic's improving a lot. Most importantly, this powerful A move in the dollar says that if it's going to turn, it takes a full month to create the up and down candle of a turn. Please talk about the third U formation. The third U formation. This is this U formation right here. This is, it's best to talk about it when I'm looking at it in the VIX index. It's just a great example. Look at the volatility index. You see there's that H pattern over there, lowercase h. Now we are starting to form the rounding bond, and that's taking you maybe to the top, and you can see it even clearer in the weekly chart, which spiked to the 200-period moving average and has pulled back. But the day is young and the week is young, and this is a weekly chart. Look at these cup or U formations. Here's another one forming, and it says it doesn't let go until there's a climactic spike to the upside and then a failure or at least a test above the 1691 level, which is the 200-period moving, that gold line is the 200-period moving average. Yes, cup formations can be very powerful, but bold formations, the longer one, like the monthly chart is forming right now, could take a long time to unfold. That's the one that's the most powerful. So, okay, so the dollar index, this is the VIX I'm showing right now. Leg C up in the daily chart should go to a D. We don't know yet. We'll see. So let's just go back to this Hindu. What we're looking at is in the daily chart of the dollar of the dollar. The daily chart says that there's 85.01 to 84.70 are moving average support levels. That's number one. The 120-minute chart says, hey, I'm underneath the 9-period moving average again for the first time in quite a while. And this says that if you're looking at the technicals, let me just do this right here. If you're looking at the technicals, be aware that the MACD is turning down, has crossed negative, and that the stochastic has turned down as well. And that's saying that there should be, over the next day or so, some selling pressure in the dollar. And that's the reason why I'm looking at it. Now let's go to gold, because there is a relationship but it's a relationship that is based not on the strength of the one, but just the direction of the one and the direction of the other. If it was strength, then the gold would be right now, instead of at 12.18, would be at 11.80 or 11.70 or something like that. So now looking at the gold, it's just stuck in this range as I see it right now. It's the daily chart has seen the technicals rally with no veracity, and there's no price movement here. I'm suspecting that we don't close up at a plus 20 on the Dow today and the S&P up 2 points. Instead, we're going to see a trading range, and there could, in fact, be a last hour slide, and then tomorrow another attempt to rally. That's just the way I'm looking at it right now. We give some kind of a doji candle to the monthly chart, and that makes October, you know, I have a rule for the doji candle. What happens the following, but it doesn't matter whether it's a 1 minute chart or a monthly. What happens the next month or the second month after that? Really important. So I'm looking at gold, and I'm seeing nothing in the way of strength that is taking hold. I see a lot in the way of strength that is in the technicals, but it hasn't been qualified by the price. So gold at 12.18 will be reflective of strength if gold can bounce to 12.43 or higher in the next 2-3 days, because that'll finally change the weekly chart a little bit more positive, and the monthly chart is still just horrible. So I don't even want to talk about the monthly chart. So that's what I want to do there in gold. And then I was asked about the XLF, which is the select financials. A peak. This is the Chapman wave formation that I call Chapman wave stalk leg formation. Had a beautiful move up, single leg up. This is not to do with any peaks or anything. This is just the visuals of a big leg up, like a stalk stands on one spindly leg. Then there's the big body, the long oval body, and then it somehow holds the body up, and then there's a final move that goes up the neck, the head, and then when it turns around at 23.88, happens to be peak D, you come back and you take out the top of the oval, which is 23.58. And if you take out the bottom of the oval, that's very important. Why? Because moves in the beak formation, when they conclude, they can have a very powerful move to the upside. But if they start to take out the body, in this case, the body, the two levels, is 23.19 and 23.16, and we've already gone down to today's low of 23.05, even though there's a nice little bounce back. This is under the 9-period moving average for 1, 2, 3, 4. This is the fourth session, so 23.34 is going to be absolutely, the whole 23.30s is going to be very important for the XLF. And look, the 120-minute chart said, yep, you hit the 200-period exponential moving average, you should have a bounce, but that bounce might not last if the stochastic and MACD start to fail again. I'm watching this real closely. Then the question came up, what about Goldman Sachs, GS? So Goldman Sachs made a peak E-top in the 120-minute chart, a peak E-top at 188.58 on the 19th in the daily. It's under the 9-period exponential moving average. The MACD is turning down, stochastic's turning down, and it's a leg D in the weekly and a possible leg F. I don't even want to talk about this in the monthly. Who wants to look at a monthly leg F in Goldman Sachs? Because if that starts to pull back sharply, it can get to 153 quite quickly, actually, from 183 where it's trading right now. So if you look at the XLF, and in a sense, it is has been one of the strongest stocks in the XLF. The XLF is a leg G/C in the monthly, an F, almost certainly an F in the weekly. I'm looking at this and I'm saying there should be a limited upside at this particular point. And then the other one was, let me just go back and see what they were. They had them in a nice order there. There we go. WFC, and this has been one of the very strong ones. Wells Fargo. Whoops, where did it go? Wells Fargo, WFC. There we go. Wells Fargo, peak E in the daily, a possible peak E in the weekly. And these cup formations at the top, the drop bucket formation, inverted H, lowercase h, with the MACD down, the stochastic says, holds at Wells Fargo. This is going to be very interesting. Now, what do I have in the monthly? I have a G/C. So this is going to be very interesting. Why? Because peak F in the 120, all of these are giving sell signal, sell mode in the 120-minute chart, sell mode in the daily. I'm about to get some information to say that the sell signal in the weekly could go to a sell mode, but only if on Friday Wells Fargo closes under, I'd say 51, so 51.78. A sharp close under 51 will just wrap it up there. And then we're going to watch that monthly chart. And we're talking about the The next one is Bank of America, BAC. Same thing. Where does it keep going to? BAC? Right there. BAC. Peak E in the daily actually is holding much better than the others. Bank of America, peak at 17.20, right there on the 23rd of September. It's trading at 16.98, down 6 cents right now. And leg D, I haven't really got the peak D. It needs to not close above 17.20 this whole week. We're going to watch this one. This one's acting quite well, actually, Bank of America. How about that? One of the worst stocks before, now holding up as one of the better ones. Then the last couple were C, which is Citibank. We'll just do this quickly. C, because I want to look at something else. C, peak E in the daily, peak E in the weekly, and an F, which might make a little double top with that double cup formation in the monthly. You're going to watch this real closely. All of these negate any sell signals if they make new highs. But boy, that's a long way away. And if you're looking at, I want to do one more. I want to go to the IWM. The question was, in the IWM, the monthly chart has an oval pattern. The oval pattern can represent the stalk leg formation. When I do the oval pattern and the technicals are fading, what it means is that I can get rid of that oval. Let me just do this for the moment. I can always put it back. And what happens is that oval pattern turns out to be a high-level consolidation, a cluster formation that's creating a spring-like formation that if it takes out the most important low, and that would be around about 107, let's call it 107. If the IWM closes on a monthly basis under 107, immediately you're going to be looking at the potential to pull back and go to the 100 to 97 area. That is way far away. I don't want to get carried away. I don't like to project out so that everybody gets really nervous. I remember driving in my car once listening to Arch Crawford, and he was just the most pessimistic I've ever heard of him. I nearly drove straight into a tree, and thank goodness we held all our positions at that particular point because the market went higher. So IWM right now is making an arch formation, testing the 109.86 level. It's at 110.98. It did take it out briefly. Today it went to 109.72. This is going to be so important. Why? Because even if there's a little bounce, you should come back and retest. And if it takes it out, the lows in that 109 area, you're going to go to 107 real quickly. And the weekly chart is not very good technically. So I think we covered a bunch of things. Oh, TLT. This is going to be so important. The TLT spiked up today in leg A. If this turns out to be a single leg A phenomenon, I don't think it's going to. A single leg A, meaning that we've spiked up without a single peak yet from the low that was made at 112.73. Let me type that in here, 112.73. And it's a single leg. But the stochastic has actually gone to 79%, almost 80%, and the MACD is turning up. And I'm getting the Chapman wave. This is that spring, what do I call it again? It is the reason why I put the stochastic underneath the MACD. It is that squash. And that squash formation says you can have a powerful move that can take you to a leg A, a B, and then a C. And then it could take a long time before it finally makes that D, because the stochastic is giving you a powerful torque, a first gear acceleration up, and the MACD, the moving average convergence divergence, is taking over for the momentum. This is still very early. It's still underneath the 119.43 previous peak on the 29th of August, and the weekly chart is good. No, it's improving, but the technicals are really not very good. The monthly chart looks excellent. So this is bonds. And if money is going to flow from bonds into stocks, we will know this week is probably the week. So the week is really young. We've got a lot of information to follow. And I believe we're about to go to a break in a moment. And as we go to the break, I just wanted to show you something that I consider to be about as important as anything else that we follow. And look at this. Hope I can find it. Look at this. The new tower's height depends on where the condos are added. This is Boston, always the last of the behemoths to have skyscrapers, and that's always a major top coming down there. We'll talk about it when we get back. Hancock Tower, Prudential Tower, and the Belkin Building.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back. So this is what I wanted to show you. I wanted to show you in the Boston Globe on the 25th of September, right there, it says new towers hike depends on whether condos are added. So it's the new Belkin building to be the third highest in the Boston area. From the Globe, 9/25/14. Belkin's revised proposal comes amid one of the most active periods of construction in the city's history. Several developers are proposing dramatic skyscrapers. Donald Chiafaro, for example, wants to build a pair of towers at the site of the Harbor Garage near the New England Aquarium. Richard Friedman has won approval for a 699-foot, 699, that competes against the Belkin building, 699-foot skyscraper at the edge of the Christian Science Plaza. And Millennium Partners is building a 625-foot condominium tower in downtown Crossing, end quote. Whoa. Oh, and of course, we remember Millennium Partners. They've not had all that greater success. Well, they now have, but they didn't before. This is going to be so interesting. Boston, I mean, skyscrapers, are you kidding? When I came here, the Prudential was the tallest building I considered then to be one of the ugliest skyscrapers I'd seen. I still do. And all right, so now let's get back to our story. This is the beginning of the week. This is what we want to look for. The Dow. And I might mention that we still remain short, anticipating that there's going to be more of a pullback, and we've got stocks and indexes that are short, and we'll see what happens. That's all you can do. You put in your trade, and so far they've been working. We'll see if they continue to work. Okay, the Dow right now is making, this is a very interesting candle, a nice skinny wick. If at any point this week the Dow starts to go to 70, if it close any two 120-minute bars, 2-hour bars in the 120-minute chart with a close of those bars under 17,000, and we're going to be traipsing all the way back to the low of the day. That's my guess. The weekly chart, I have no signal yet other than to say I have technical signals that are really close. If the price confirms with the close this Friday below, I wouldn't say 17,000. I have to say 16,930, somewhere around there. That'll say I finally got a sell signal in the weekly chart. If there is a move up and the weekly chart just pushes higher, goes anywhere into the 17,100s by this coming Friday, I'm going to have to look at it and say, you know what? You could recycle, and in fact, you could go to leg C and then even a D into October. I'm not going to fight you, but I do believe that we've picked out some nice places to be going short and indexes that are vulnerable to pullbacks and stocks. So, and the monthly chart, well, we'll talk about that at the end of the close on Tuesday. Why talk about it now than to say the doji candle is probably going to be the candle that we're looking at, real close to the open. Closing real close to the open, and the open this year was 17,000. This month was 17,097. So within 20 points up or down. So here we go. VIX index. Follow the VIX, because that's been telling us a really interesting story for the very first time. If the VIX index, which is in leg C right now in the daily chart, that's the only way I can count it, closes tomorrow afternoon, Tuesday afternoon, anywhere under the 1450 to 1429 area, it's going to say, hey, watch out, that weekly chart could garner some strength. That weekly Dow and S&P could garner strength. So I'm just looking at it that way. It's price points that are going to tell me the story. If you look at the NYA.X, that's the New York Stock Exchange. That New York Stock Exchange, right now, it's just a tiny little candle. It's barely budged. It's just saying, hey, what rally? Who, me? I'm down 34 points at 10,763. Gone to leg D. I could bounce, but it's just a rectangle pattern at best. So those are the things I'm looking at, and we're going to be following the dollar real closely because the dollar is holding well, especially for a huge move like this. It deserves a little bit of a consolidation. 85 to 84.69 could be the support area. Hey, folks, we've got Larry Pesavento coming up, and great program all day. Stay tuned. Should be wonderful shows, and I will be back tomorrow. Check out my opening called Front Page of TFNN. See you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.